I came across a very interesting statistic that I think is quite relevant to the current market sentiment. 42% of the S&P 500's strongest days in the last 20 years occurred during a bear market, whereas 36% of the market's best days took place in a bull market. So I want you to think about that and digest that for a minute, that you actually have a higher probability of hitting the best market days in a bear market. What to do whenever crazy shit hits the fan like it has been. Like, majority of people panic, so they fall into their psychological biases of I must avoid loss at all costs, or everyone else is selling. Those are the two main biases that people implement during market downturns. And if you fall prey to that, you're going to miss out on lots of stuff. And there's all kinds of data suggesting if you just stay in the market, your returns are better than if you try to time the market.
And Tony Robbins wrote, I personally think, the best investing book that's out there. I've read 20 plus of them. And one of the big things he has in there is the historical data that shows the difference of a person that was invested, tried to time the market versus just stayed in.
I can tell you that the one thing that the market has no guarantees, but when you sell, you're either guaranteed a profit or a loss or a break even. That's one of the few things that in the stock market that is actually guaranteed. Generally, when you're selling during a market downturn, probability is much, much higher that you're basically locking in a loss.
And even
if you plan to get back in the future, it doesn't matter, you locked in a loss. And the probability of actually getting in at a better price after you let all the psychological tendencies go through your mind is slim.
And then because you have that loss, you already have that
you have the loss, you're like, oh my God, I lost money, I'm going to wait till everything's golden. And the turnaround for corrections in bear markets is crazy.
It's so quick.
I just read that the correction, it takes 5 months for a correction to go from the top to the bottom of the trough. And it only takes 4 months for it to go back up above where it was prior to the correction. So you have to think about that.
But the biggest gains are right in the beginning when it pivots.
You have to think about that that's a quick turnaround. And the bear markets generally last a year and a half, but their turnaround's pretty much instantaneous as well. So for you to get in the bottom of anything is...
Stop moving.
Unless you have software or a crystal ball or something like that, the probability of getting in at the bottom to maximize your profits is
one of the biggest myths in investing. You can't time the market.
Probably better to just buy lottery tickets.
It's where you do dollar cost averaging. Or dividend stocks and just turn the drip on. They do it automatically.
That's what we do. We do right now, what we're doing right now is when I get cash, I'm just putting it into shit that we already have that's down. Because it's going to generate me better returns in 6 months or a year and a half.
Lower cost basis, higher return.